Okay, so in 4 weeks, not that much effort, I put $400 million into this ecosystem, and it took you know how long it took me to gather the first $400 million? 30 years. 30 years of 2,000 people going through millions and millions of transactions to get the first 400 million. Few weeks, couple of people get the next 400 million. Why? Because we're publicly traded, because we follow the registration statement, because we can tap the capital market. JP Morgan can get in this space. Coinbase can get in this space. Square can get in this space. Square's a bank. Like there's this Coinbase wants to have a lend product that has yield. The SEC says that's a security. They can't offer it. Okay. Well, they didn't say you can't offer it. They said you actually have to register it under the SEC 40 Act. There are plenty of organizations that offer money market funds with yield. You're either a bank and you offer a savings account with yield and you subject yourself to banking regulation, or you're issuing a security and then you have to file that with the SEC. You're running a fund, and the NYDIGs of the world and the Fidelities of the world, they're filing their funds, with the SEC, and they're getting SEC authorization for that. So I think that there's going to be a massive competition, and there's a market competition. Will centralized regulated entities in the U.S. that have gotten certified funds approved by the SEC, will they create that opportunity? Will Square and PayPal with mobile apps, will they do it on a mobile app? They probably also need to get SEC approval to offer it as a mobile app, right? Just because you have a mobile app doesn't mean you don't have to, you saw Abra has this issue where they have to get approval from the New Jersey authority to offer a yield product on a mobile app. So you're going to have the technology players wanting to get into space, call it fintech. You're going to have traditional players like Fidelity wanting to get into space through traditional funds. You're going to have these interesting Lightning-based things that want, there's non-custodial wallets in Lightning, like Moon and Breeze. Then there's custodial wallets like Shivo, right? And Shivo's got, can Shivo move Bitcoin around with a banking license? Sure they can. Why? Because El Salvador made Bitcoin legal tender, so that's why they can. Then you're going to have the crypto space, with Ethereum and Cardano and, and Binance Smart Chain and Solana and all the rest competing. And you're going to have all sorts of issues of competition versus, technology versus regulation. And then you're going to have jurisdiction. And, Binance and FTX are offering very innovative products, but they're not offering them in the US. So what will happen? And the answer is stay tuned. I just watched yesterday a senator, Toomey, ask Gary Gensler, can you please, is a stable coin a security? And Gensler said, it may be. He didn't say it was. He didn't say it wasn't. He said maybe. And Toomey said, well, it doesn't seem like it to me. And, because I'm not pursuing profit. Of course, and Gensler's response might very well be, yeah, but people on the other side of the trade, the people that issued the stable coin, are trying to borrow $60 billion at zero interest and lend it out at 60 basis points. They're pursuing a profit. This is why it's an unregistered money market fund, and you got to come and register with us. So they went back and forth, and at the end of the day, Toomey said, you need to give me clarity. Okay, instead of actually regulation by enforcement, why don't you actually publish something? Okay, and Gensler is kind of saying, I hear you. Now, what's going to happen? I think we can expect over the next 12 months, you're actually going to see more guidelines about this. But it's pretty clear to me in the last 12 weeks that if you really want to win the DeFi space in the next decade, I think the winners, Raul, are going to be the publicly traded institutions that know how to navigate the corridors of power, right? That the ones that, if you can take your company public and you can raise $10 billion via a registration statement, then I think you're going to be a big advantage. I think that Fidelity issuing an ETF is going to be a big advantage if they get their ETF approved. I think the NYDIG is going to have a big advantage. I think that people that are trying to operate outside of that system, if you can't tap into the public markets, like I don't know if you noticed, I just sold nearly $400 million worth of equity into the public market via registered ATM. And then I converted into Bitcoin. And I did that in 3 weeks. Okay, so in 4 weeks, not that much effort, I put $400 million into this ecosystem. And it took you know how long it took me to gather the first $400 million? 30 years. 30 years of 2,000 people going through millions and millions of transactions to get the first 400 million. Few weeks, couple of people get the next 400 million. Why? Because we're publicly traded, because we follow the registration statement, because we can tap the capital markets. Gensler says this to the Senate yesterday, I quote, "If it stays outside of the public policy framework for AML, tax compliance, and investor protection, it is not going to long persist," unquote. I think that's pretty clear what he's trying to tell you.
The issue I've got with all of this is I get the AML, I get the tax stuff. It's this stupid securities law from 1933, 1934 that doesn't make sense. It makes it highly restrictive in who is able to access certain things. It's that what is a security is we're trying to fit something into a wrong framework.
Yeah, well, I mean, that's what the crypto guys would say.
Because anybody can buy a house. If you say it's a property, everybody should be able to buy it.
Yeah, but Raul, if I created my own MicroStrategy and then I pumped it on Twitter and I dumped it on the retail population after I gave a bunch to a celebrity who then told the world it was great, it's illegal and it's unethical. The truth of the matter is, if you have a centralized group of people creating a token, which is a security, giving it to themselves and then selling it on the market and representing it as a decentralized property, you're crossing an ethical line and you're also crossing a legal line, and you can't avoid the ethical responsibility and the legal responsibility simply by saying, oh, it's new tech.